Good evening. I'm Tina Hui with BNN. This has been a busy couple of weeks for Bitcoin and blockchain. Big moves are being made by major players in the blockchain technology space at the beginning of this second week of November 2017. Some of the stories we are following that we'll be covering today include the much anticipated and highly debated SegWit2x hard fork for Bitcoin, which has been suspended, leaving a shock to the entire system. More on that in a bit. And the buzzword for today, Ethereum. It's hard to contest which made more heads spin this week. The news of the split not happening, or yet another major calamity with Ethereum. One thing is for certain, speculators are not being shy that if Ethereum cannot get its bugs fixed, the crowd will likely go someplace more secure and fast. Third story, the United States Parcel Service has joined the Blockchain and Trucking Alliance, signaling a long-term interest in using blockchain technology to improve their systems and disrupt the logistics industry. India's central bank is still not adopting Bitcoin for payments or settlements. Alternatively, India's central bank is researching a fiat cryptocurrency that will deliver a digital rupee, which is to be a digitized alternative to India's fiat currency. Thailand's fifth largest bank has completed a blockchain pilot aimed to streamline the contract management process in partnership with IBM. The bank is expecting to turn the initial concepts into reality within several months using Hyperledger Fabric and blockchain services on the IBM cloud. Speaking of IBM, the tech giant is making strides to pitch a way to help stamp out the black market by enabling British Columbia to track legal marijuana with blockchain technology. Meanwhile, BP, Shell, and Statoil are all energy firms with one thing in common. They are partnering and backing a new blockchain based trading platform, which signals the latest application of the blockchain technology to the energy space. Alas, pretty exciting things happening. Let's go on with the show. On November 8th, Bitcoin hit an all-time high of 7,800 USD in the aftermath of confirmation that the much anticipated and highly controversial software proposal to increase the block size of blockchain by way of yet another hard fork, SegWit2x or 2x for short, has ultimately been suspended due to a lack of consensus. Known for having strong support from Bitcoin startups and mining pools, 2x was intended to increase Bitcoin's transaction capacity, which has been constrained by the nature of the Bitcoin blockchain's rules to trigger a block size increase, which was expected to occur on or around November 16th of 2017. In a shock and surprise to both the community and to the price of Bitcoin, the suspension was announced in an email by Mike Belshe, CEO and co-founder of Bitcoin wallet service provider BitGo. As one of the leaders of the SegWit2x project, he argued that the scaling proposal has become too controversial to move forward, acknowledging that there is not enough sufficient consensus for a clean block size upgrade at this time, and that continuing to push forward with 2x could ultimately lead to a great divide in the community, which could be a significant setback to Bitcoin's growth. This was never the goal of SegWit2x. The note to suspend the plan to MB upgrade was also signed by companies that originally supported the plan in May of 2017 and included Zappos CEO Wences Casares, Bitmain co-founder Jihan Wu, Block CEO and co-founder Jeff Garzik, Blockchain CEO and co-founder Peter Smith, and Shapeshift CEO and founder Eric Voorhees. The group is still holding out hope that the block size increase can be implemented once there is more agreement from stakeholders at a later time. Until then, Bitcoin Core developer Jeff Garzik has shared in the BTC1 Slack group that the 2x would continue to be developed with the additional hopes that it may support other chains such as Bitcoin Cash, Litecoin, and other Bitcoin family chains in the future. While scaling the blockchain is an important and sensitive topic to Bitcoin developers, community, and industry, a dispute continues over whether developments within the Bitcoin protocol and other cryptocurrencies should be executed and conducted in a decentralized manner. Scaling is a necessary issue to be addressed. It needs to be happening in the right way, and more importantly, in an open source decentralized, distributed manner, and with more and more people, most notably of late, creator of Litecoin Charlie Lee standing with Nick Szabo and Bitcoin Core devs, the community is beginning to reject SegWit2x fast. The proposed hard fork is facing a lot of scrutiny in light of various technical issues, beginning with closed source development and opaque agreement made between a restricted group of businesses, developers, and miners, and the SegWit2x development team's refusal to implement strong replay protection, according to CryptoCoins News. Those trading should definitely pay close attention to the space. Things are moving drastically and fast. As of 10 p.m. on Wednesday, despite Bitcoin hitting its all-time high of $7,879, the price dropped quickly following the news that SegWit2x was suspended, leaving many traders in a state of shock. Bitcoin trading analyst CryptoBud shared a video in the aftermath of Bitcoin trading with the prediction that Bitcoin will become a more stable player now that 2x has been suspended, and agreed with all other accounts that a consolidation is to occur in the Bitcoin price in the days to come. According to CoinDesk, market observers admitted this chart showcased something that has not been experienced or seen since September of 2017, when China moved to ban ICOs and shut down its crypto exchanges. An unexpected shock. It seems that many new buyers were allocating capital into Bitcoin in anticipation of a split, thinking 2x would produce new coins, as was the case in Bitcoin Cash. People were selling altcoins and buying BTC. A glance at CoinMarketCap is revealing that traders have moved elsewhere in the market following what must have been disappointing news for those who were hoping to win big with a quick purchase before the split. Meanwhile, a manager of Bitcoin.com, Jake Smith, sees today's events as great news for Bitcoin Cash, as businesses will likely begin to flip since high fees are beginning to hurt a lot of businesses. Again, if you are trading, proceed with caution. Let's move on to the next story. It is being stated that approximately $300 million worth of Ether was accidentally lost due to a bug this week. An Ethereum user, a developer known as DevOps199, was mistakenly taking control of hundreds of wallets containing the cryptocurrency Ether, which is a tradable cryptocurrency on a distributed app platform that was being kept in digital multi-signature wallets built by a developer known as Parity. So, this developer destroyed them in a panic while trying to give them back. Parity wallets require more than one user to enter their key before funds can be transferred. As it turns out, Parity was fixing a bug in July that let hackers steal $32 million out of 3 multi-signature wallets, and a marathon coding and hacking effort was required to secure another $208 million against theft. Patching of that bug led to the flaw in Parity's system that accidentally left behind a second flaw in its system that allowed one user, DevOps199, to become the sole owner of every single multi-signature wallet. What a nightmare. And that is exactly what happened when DevOps199 triggered the flaw by accident this week. According to The Guardian, after realizing they accidentally took control of all the multi-signature wallets, they attempted to undo the damage by deleting the code, which had transferred ownership of the funds. Makes sense. And then, unlike most cryptocurrency hacks, the money wasn't stolen or taken as they have been historically. Instead, DevOps199 accidentally stole hundreds of wallets simultaneously, which could be worth approximately $300 million according to the community. These are just estimates. And then, instead of returning the money to right the wrong, his efforts ended up locking all the funds in those wallets permanently with no way for anyone to access them. Talk about a bug. Parity, who was alerted of the error, has released a security advisory confirming that there's currently no way to move the funds out of the frozen multi-sig wallets, and that an analysis and further research of the situation is still occurring to try to recover the wallets. In the aftermath of this accident, some are pushing for a hard fork of Ethereum, which could potentially undo the damage by asking 51% of the currency's users to agree to pretend that the incident has never happened. This would require a change to the code that controls Ethereum and mass adoption by the majority of the user base. The question and problem of the week: whether the community will refuse or accept the change, and whether this fix would result in a split of Ethereum group into 2 parallel groups. This, sadly, isn't the first time something like this has happened. 2 years ago, a hack of an Ethereum app called the DAO, or DAO, resulted in $150 million worth of Ether being stolen. A hard fork was successful in that instance, but the money stolen represented a much larger portion of the entire Ethereum market than the $300 million lost to Parity. Parity is now arguing that the funds are not lost, but rather frozen. and it is disputing the $300 million figure at this time. Either way, many speculate that the figure is in fact at least that much, if not more, with seemingly no way to unfreeze the funds. According to Dominic Williams, founder of blockchain firm Dfinity, the Parity vulnerability was the result of an incorrectly coded smart contract that was used by the Parity wallet to store tokens on the Ethereum network. The vulnerability made it possible for anyone to freeze the tokens held by that smart contract, making them virtually immovable. At this time, the only method anyone is aware of to unfreeze tokens held by the vulnerable smart contract would be to create a new hard fork Ethereum client. This would require every full node on the Ethereum network to upgrade by the date of the hard fork to stay in sync, including all miners, wallets, exchanges, and the like. Either way, we hope things get fixed fast. Moving on, blockchain is taking center stage as a technology platform answer to make transactions more efficient and reduce payments disputes in the logistics industry. Yep, you heard that one right. CNBC is reporting that a UPS, short for the United Parcel Service, has joined the Blockchain in Trucking Alliance, otherwise known as BITA today, or BITA, Tuesday, November 7th, 2017, in what will be a giant step towards disruption in the trucking industry. In summation, UPS's Director of Enterprise Architecture and Innovation, Linda Weekland, supported the company's recent interest in blockchain. She is saying that the technology has the potential to increase transparency and efficiency among shippers, carriers, brokers, consumers, vendors, and other supply chain stakeholders. While it may take years to get the technology in place, investor group Stifel's analyst John Larkin sees blockchain as a technology that will enable the truckload pricing futures market and the data analytics assisted and artificial intelligence assisted real-time matching of loads and empties to be combined. Larkin adds that three companies, UPS, C.H. Robinson Worldwide, and XPL Logistics, will be investing in the technology to drive the consolidation of the industry around these core transformational technologies. What does this all mean? Products would arrive more cheaply, quickly, precisely, and software providers, data providers, and trailer leasing companies would see greater value from day-to-day operations if the technology is implemented as the logistics industry is theorizing to the best advantage. Transparency and beta industry standard protocols are a win with blockchain. Moving on, according to CryptoCoins News, India's central bank isn't adopting Bitcoin for payments or settlements. Ganesh Kumar, an official for India's central bank, the Reserve Bank of India, has predictably reaffirmed the authority's stance in avoiding and not being interested in adopting cryptocurrencies like Bitcoin. The public statement made by Ganesh Kumar at a banking event following an inquiry about Bitcoin from the audience is as such. Our current position on Bitcoins is that we will not be using it for any payments and settlements, though the technology underlying cryptocurrencies will not end. What does that mean? Well, this comes as no surprise since RBI's executive director had shared at a fintech conference in September that when it comes to non-fiat cryptocurrencies like Bitcoin, which are seen as a private cryptocurrency, the bank is not comfortable. Despite India's finance minister Arun Jaitley underlining a notable growth in India's Bitcoin market this year, the official stance on Bitcoin remains, and a public notice advises retail investors and citizens to beware of Bitcoin investments or usage in the country. This stance has been the case since December of 2013. Alternatively, India's central bank is researching a fiat cryptocurrency that will deliver a digital rupee, which is said to be a digitized alternative to India's fiat currency. India is one of many countries that have had Indian authorities establishing a digital currency committee to develop a framework for the legal and regulatory future of cryptocurrencies in the country. In fact, the United States SEC has also created a new cyber unit in August of 2017 to do the same. India is one of many countries that have had Indian authorities establishing a digital currency committee to develop a framework for the legal and regulatory future of cryptocurrencies in the country. In fact, the United States SEC has also created a new cyber unit in August of 2017 to seek out what regulatory framework is necessary. As Bitcoin gains in mainstream popularity, awareness, and adoption in society, central bankers of every country are increasingly fielding questions about decentralized cryptocurrencies that are independent of state controls. Such as their hesitation to Bitcoin, the central banks around the world, including Singapore, China, Canada, and Russia, are working toward developing their own central bank-issued digital currencies issued under their control. Fascinating movements, we hope, will be positive to the industry, where everybody will start adopting better business practices. Thailand-based bank of Ayodhya, Krungsri, which is Thailand's fifth largest bank, has completed a blockchain pilot aimed to streamline the contract management process in partnership with IBM. According to Krungsri's Chief Information and Operations Officer, the trial, which was intended to rationalize banks' related party transaction or RPT capability, explored the potential benefits of blockchain technology in boosting efficiencies, internal processes, improving customer convenience, and resulted in improved transparency and data security, as well as speeding up operations. The goal is to digitize the paperwork process, store document contents with authentication and approval information in the blockchain-based database, and expand the service platform across the bank and its subsidiaries. The team behind this successful pilot, Krungsri, partnering with IBM's Cloud Garage team, using Hyperledger Composer as a framework to simplify development of the blockchain application. The bank is expecting to turn the initial concepts into reality within several months, using Hyperledger Fabric and blockchain services provided on IBM Cloud. Speaking of IBM, the tech giant is making strides to pitch a way to help stamp out the black market by enabling British Columbia to track legal marijuana with blockchain technology. IBM has recently pitched the British Columbian government with blockchain as a possible high-tech solution to Canada, which is on its way to legalize marijuana next year, leaving the provinces attempting to find a solution to manage and sell the marijuana in the best way possible. According to a document hosted on British Columbia's government website posted on November 1st of 2017, IBM, who is highly invested in the blockchain space and has proposed to use the blockchain technology to keep track of marijuana distribution and sales as it goes from seed to sale. The document was submitted by IBM in response to the British Columbian government's public consultation and request on how to manage legal marijuana in the province in the best way possible. IBM expertise can be used to help guide federal and provincial government clients on best practices, planning, and execution upon request, which will in essence be a farm-to-table surveillance mechanism for legal marijuana in British Columbia, where every transaction or action within the system they build can then be tracked and data mined. In addition, the blockchain would provide trends of consumption through data analytics and create predictive insights. An emailed statement from BC Minister of Public Safety and Solicitor General Mike Farnworth to Vice stated that the government is reviewing all consultation submissions. British Columbia's top priorities in this regard are the protection of young people, health, and safety, keeping the criminal element out of cannabis, and keeping the roads safe. The blockchain in this implementation would empower the government to take control of sourcing, selling, and pricing of products. Therefore, it can also reduce or eliminate black market sales completely. The ledger system could also help producers manage their supply, and if the government sells the plot itself, like Ontario plans to do so, the blockchain could track retail purchases as well. The idea of tracking legal marijuana is emerging as a market solution with US company Medical Genomics, which is already offering a service for growers to have their bespoke legal marijuana genetically sequenced and tracked on the blockchain. Moving on, meanwhile, BP, Shell, and Statoil are all energy firms with one thing in common. They are partnering and backing a new blockchain-based trading platform, which signals the latest application of the blockchain technology in the energy space. Companies involved in the effort to create a blockchain-powered platform for energy trading that will be open to all market participants also includes ING, ABN AMRO, Societe Generale, as well as trading firms Gunvor, Mercuria, and Coach Supply and Trading. The blockchain-powered platform is to be controlled by an independent entity and is being planned to be fully operational before the end of 2018. In light of emerging energy industry complexities, ING representative Caroline van der Giesen told CoinDesk that a joint initiative among some members of the consortium, including ING, Mercuria, and Societe Generale, presented compelling results with what they understand to be the first blockchain prototype test in the sector. The experiment involved an oil cargo shipment containing African crude oil, which was making its way to China. The results of the experiment demonstrated that a blockchain-based platform could greatly improve the efficiency of certain processes. This is not the first experiment in the energy space to use blockchain to track energy trading. In the case of BP and Eni, the oil giants began running blockchain trades in European natural gas in parallel with their live trading systems, according to developer BTL Group. Italian gas and electricity firm, meanwhile, Enel and German firm E.ON have also conducted blockchain trials using Ponton's blockchain platform, exploring how peer-to-peer trading can facilitate direct sales of power. One of Australia's largest electricity providers is currently testing a platform called Power Ledger. Interest in blockchain is based on whether or not it could help reduce the costs associated with power distribution, intermediaries, and provide more transparency to the entire process. Sounds complicated, but also really, really great in terms of development of transparent processes. Well, that's it for tonight's recap. Thanks for tuning in. I'm Tina Hui. Good night.